Right, morning everyone. Welcome back to our morning kappa. I'm Joseph here. So looking at the Hang Seng Index, last week, the Hang Seng Index underwent a series of counter trend rebound. It has been moving higher high and right now testing the downward trending 20 days moving average. So just to recall that in a bearish setup, right, the resistance will be strong and support level will be weak. Now, although it's a downtrend, but index is not going to be one way down. It will be a lower high and lower low. So you can see that based on the price actions in the medium term, right, the Hang Seng Index shows that it's moving on a lower low and lower high. So coming 1 to 2 weeks time, if the Hang Seng fail to rebound, cross above this 24,500 point level, likelihood is going to resume downward movement towards at least 22,000 point level. So we keep a bearish bias on the Hang Seng Index until it breaks above 24,500 point level. Now, as for the market breadth, you can see that last week the US is underwent corrections, but the Hang Seng Index managed to rebound, while the counterparts US market undergoing mild corrections right now. So riding on the near-term rebound, I'll be looking at the Hong Kong index member 1211 BYD, that the stock have break above 83 Hong Kong dollar. So if this momentum follow through, it should test 89 and followed by 95. So downside support is 77. Then on have another stock 3600 Modern Dental. You follow our trading stocks. We have been looking at Modern Dental, and the stock has been moving up. And right now, yes, on Friday, you have a break past of 6 Hong Kong dollar 30 cents. Testing the next R1 690 and followed by 740. Downside support is a 580. So we have a BYD 1211 and Modern Dental 3600. Now, as for the China A50 index, it has been undergoing corrections. 1st of July was the Hong Kong holiday, but 1st of July, Hong Kong, China market to operate, and the Thursday, the A50 have a very strong selling pressure. It breaks below the 14,900 point level. So as such, you can look back, right, for the past 2 to 3 months, right, the A50, right, also charting a series of lower low and followed by a lower high as well. So failure to climb above 300 point or reclaim territory above this long-term 200 days moving average, then on China A50 may experience a further selling pressure on the downside. Right, as last week, you can see that most of the Chinese stocks experience corrections. Only the BOE, the Chinese name Jing Dongfang, is bucking the trend, went up by 11%. Nevertheless, right, we look at the counter trend rebound by another counter in A shares at 1309. right? Bouncing off the 805 renminbi. So it break past 910, it should climb towards 1000 and 1080 resistance level, right? And meanwhile, can look at last 1 week, the crude oil price continue to experience corrections, despite that the negotiations between US and Iran are still undertaking at Doha right now. So you can see that last week the crude have went below the 70 level, and right now trading at somewhere at 69. Now look at the crude oil price chart, right? Recall that during the end of Feb, that's where the US launched their first attack on the Iran. You can see that the oil have actually jumped above 70. So the oil basically have give up the gains since the war, and right now heading towards the pre-war level 69 and below. So if this momentum follow through, the crude oil likelihood to decline towards 60 and followed by 55. So on the upside, I will see that the stop loss at 85, as long as stay below this 85, right? The mid to long term trend should be bearish on the WTI crude. As for the gold, you have made a very strong interim base at the 4,000 level, right? So basically, gold have the traders are looking at what two piece. One very important news is whether that what is the year-end interest rate of US right now, and the new chairman Walsh have mentioned that he's not going to let the inflations to move above 2%. But look at his latest remark in policy in the June, right? They actually contemplating to replace a new formula for the inflation's number, right? But what happened is that the gold have made a very strong base at 4,000 right now, heading towards 4,004, right? So I think in 1 to 2 weeks time, market is still looking at the inflation data. Market is trying to guess what is the Fed interest rate will be at the year end, and meanwhile, right, the market is also looking at the this latest guidance. The FOMC meeting minutes are going to disclose middle of this week. So I think that FOMC minutes report may actually move the gold price that again, right? But at this juncture, we still keep a bearish bias on the US gold with the stop loss at 4,004 level. Okay. Now, S&P 500 have experienced mild corrections last week. Can see that strong selling pressure happens on the memory counters. Micron went down by 20%, followed by SNDK. But over the week, we do see that Microsoft managed to rebound by 7%, right? So at this juncture, the S&P is still consolidating sideways at 7,005. Now, while the S&P is consolidating sideways, their counterparts, Europe market, you look at the index SXXP, you have managed to break multi-month high right now. So as we understand that Europe also have uh, uh, they also have a tight supply on crude oil, as the crude oil have went down, right? What we do see is that the Euro market have actually moved higher. So while the US is undergoing consolidations, we do see that funds are moving to the China market as well as the Euro market, right? Meanwhile, for the US market, we're looking at the consumer stock. Coca-Cola have break past the 83 US dollar, heading towards 87 and followed by 91. Downside support is 79, and then on another the industrial counter RTX, see that the share price have break above 195 resistance. So based on the price volume profile, the stocks right now is showing bullish bias as they climb above this VWAP price, right? So if the stocks can stay above the breakout point of the VWAP of 195, it should continue to move towards 208 and followed by 220. And downside support is 185. As for Malaysia market, last week we have a rebound over the week, but you look at the weekly chart, The FBM/KLCI remains below the 20-week moving average. It shows that correction still in play. Right, on the downside, very strong support will be at 1645. Breaching this on 1645 will dent the market sentiment. So for Malaysia market, most important event that will affect the market sentiment will be the Johor elections, state elections that's going to happen this coming weekend. Right, based on last week, technology, utilities, and energy have a very strong rebound, but transportation and constructions do experience profit takings. So we still keep a bullish bias on the FKLI unless it breaks below the stop loss point of 1650. As for the FCPO, it continued to face corrections last Friday. We do see that strong resistance at 4007 right now. So on the downside, FCPO may decline towards 4390, followed by a 4300 level. As for the trading stock this morning, firstly, we look at Celcom DG, CDB, break past 2 ringgit 85 cents. After a breakout, Celcom may test, DG may test the 3 ringgit 5 cents and followed by 3 ringgit and 35 cents. Counter support is 2 ringgit and 65 cents. Then on, we have the oil and gas counter. Bumi Armada break past 35 cents and half resistance level. R1 will be at 38 and followed by R2 41. And downside support is at 33 cents. So we have two breakout stocks, Celcom DG and followed by Bumi Armada. So I stop here and pass on to Xian Yong on the weekly economics report. Thank you.
Thank you, Joseph. Let me share my screen. Okay. Okay. So, morning everyone. Thanks for joining our call. So currently, we can see that from our sentiment index that investors still seeing about mildly risk positive. If US stock, especially the S&P 500, to climbing to its best quarters in 6 years, backed by AI-backed rally. However, the geopolitical tensions continuing to stay elevated and uncertain whether Iran that has been reiterating its determination to control the maritime tariff through the Hormuz Strait, suggesting that potential frictions ahead of the peace talk into August. However, our assumptions still remain stable that the US-Iran ceasefire will be extended into the year end and the AI-related rally will persist. This has resulted in a global risk-taking appetite. So, while global growth and investor confidence could remain constructive supported, we also see that the sell down by AI stock, which is may derail our optimistic view should it persist into 2H26. So, other than that, we still look if you look at the fresh data coming from US front, let me show you here. So the swap pricing for FFR has consolidated lower from 1.6 to 1.2 height, suggesting that investor may see that this rising momentum in jobless claim and surprising weak non-farm payroll data. So the employment has been declining to 4.2% if you look at the right-hand side chart, but the fall was discouraged is driven by the discouraged workers. So it means that labor force has been getting more narrow and GD employed person remain unchanged. So on China front, we continue to stay cautious on China. If you look at figure for China PMI and also other key indicators, you can see that some decline has been seen in Chinese equity benchmark, where investor has turning more defensive into telecom and information tech names. So in the PMI data, as I mentioned earlier, has marginally dropped from about 51.8 to 51.7. This has been reinforcing the growth may be stabilized now, but likely to moderate further in the coming months. That's all from me. We'll pass on to next speaker, Adam. Thanks.
All right. Good morning, everyone. Let me just share my screen. Okay, so as we all know, LRT3 was just started operations last Monday. So we actually took the time to take a ride on it on the first day of operations, which was on last Monday, and felt very in a way upbeat on how we felt as a commuter using this LRT3. So just to recap, LRT3's stack is at 16.6 billion ringgit, covering 20 stations, but there will be another 5 provisional stations which would be reinstated. And in fact, the contract for these 5 reinstated stations has or was already awarded to MRCB for 2.5 billion ringgit back in February last year. And notice to proceed has been given by Prasarana to MRCB sometime in the first half of this year. So perhaps you could see some progress towards the end of the works to start towards the end of this year. So if you can see, yes, this is the photos that some of the photos that we took. And interestingly, people tend to relate public transport to transit-oriented developments, and we actually spotted a few. So, if you look at this map, this is the LRT3 Datuk Menteri Station, and as you can see, there is 2 ongoing property development projects, Astrum Shah Alam and Sinar Residence. And interestingly, for Sinar Residence, which is on figure 7 here, we found that Johan, which is a listed piling contractor, is currently doing some piling works on it. So I know with a lot more potential for TOD projects to come about from LRT3, we think that it could also lead to potential construction demand. And also there's also a tunneling section which we went through for LRT3. And I think moving forward, while MRCB is the main con for the 5 reinstated stations, we do bear in mind that there is a possibility, for the previous subcontractors involved in the previous 20 stations to get, a chance to be involved in the 5 reinstated stations, which are shown here. A few of them include WCT, TRC, Muda Jaya, and Gabungan AQRS, amongst others. So there would definitely be a benefit for the second liners of contractors. So all in, no changes to our earnings estimates, maintained by with an unchanged target price of 51 cents. That's all from me, everyone. Thank you for dialing in into today RGB Morning Kapai 8. We will see you tomorrow at the same time and same place. Have a great day ahead. Bye-bye.